Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association of Michigan.
Good afternoon, and thanks for joining us today. I'm Sarah Miller, Vice President of Marketing and Strategic Communications. Before we get started, I'd like to welcome one of our new VIP members, Hired in Michigan LLC. So welcome to CJ Eason and the rest of the team. They are located in Southfield, and we are welcoming them on behalf of our sponsor, Consumers Credit Union. You can learn more about Consumers Credit Union at consumerscu.org. So Brian, October is actually Cybersecurity Awareness Month. And in honor of that, we wanted to introduce our viewers to three of our partners who are helping small business owners become more cyber aware and cyber secure.
Yep, got a 1, 2, 3 punch for you here, and got some very practical resources that anybody could take advantage of and utilize as part of your membership with SBAM. I really would encourage you to intently listen up to this part of it, but then to also to come away with it with a resolve to do something about it. You know, one thing I've noticed about when it comes to cybersecurity and making sure that we're well protected, it's something that everybody recognizes and accepts and believes is a big threat, and very few are doing substantial things to deal with it. So we try to break it down and make it a little bit easier. To start with, let's start with Joe Summerdike. So MAIA Insurance Services, cyber insurance. So Joe, let's just start out with that 10,000 foot question. Why should a business have cyber insurance, particularly a small business?
Really great question, and thanks for having me. And long story short, it's an existential crisis for small businesses. According to a recent study, 60% of small businesses go out of business after a cyber attack that's uninsured. So the fact that most small to mid-sized businesses can't withstand an attack of that size and scope is should be reason enough, I would think. In fact, claims data suggests that small to mid-sized businesses are actually targeted a bit more than bigger businesses these days, just because we all know small business owners and the amount of hats they wear. They may not have their own IT staff or anything like that. So they're becoming more of a target than they have in the past as well.
So the more practical we can be, the better when it comes to taking steps and down this road or down this journey. So what does the process of getting cyber insurance look like? Like, how do you even start it? How do you know whether you have coverage that's good or adequate, what it covers, what it doesn't cover? We've heard, you know, some stories of some folks thought they were covered, thought they were adequately covered, turned out that they weren't. So just give us a sense for what it means to be fully covered.
Absolutely. So first of all, to answer your question about applying, I'd like to demystify that a bit. I think there's a misconception that it's a long and arduous process. So it's easier and harder than you would think, actually. So the easy part is applying. It usually takes about 5 minutes. There might be 10 questions you have to answer. The hard part comes in with getting approved for a policy that has broad coverage and a reasonable price. So a little bit of a background. Cyber insurance is what we currently call a hard market, which means it's more difficult to obtain policies and more difficult than usual to become approved. So we're going to hear from SensCy and RiskAssure. They have some resources that can help you get the best outcome for that. But in general, there's a few things you could do to be prepared for that process. So a few pieces of information are multi-factor authentication. So we're all familiar with this, I'm sure. You put in your password, you get a 6-digit code on your phone, you enter that. That's something the insurance carriers are really looking for. Having encryption enabled on your devices, and then backing up your data. Those three things go a long way in the process towards getting a good quote at a reasonable price. As I mentioned, it's a good three-pronged approach. SensCy and RiskAssure have some good resources that help with that as well.
Excellent, thanks, Joe. So let's switch over now with Larry Faragalli and RiskAware, a product that is available through your SBAM membership. It really would encourage you. In this one, there's no reason not to do it, and that you can do it for free. I mean, literally to check it out. But Larry, tell us about what RiskAware is and why it's important in this process.
Sure, thank you, Brian. RiskAware is the product, RiskAssure is the company. And what it is, very simply, and it's a great segue from Joe, is a tool that you can install on your machine or all of the machines on your network that will look for sensitive data. And that's personally identifiable data, that's healthcare information, that's anything that you would be fined for if it was found outside your custody. Our tool finds every instance of that data and then tells you what the exact finable value of it is. So when people are buying, or shopping for cyber insurance, one of the first things that they run into is they don't know how much insurance they need. And, while IT firms can help you look at the setup of your network and your password policies and your multi-factor authentication and everything else, it's not looking necessarily at the contents and ascribing a price to them. So our tool, very simply, for free, will tell you exactly how much cyber insurance you actually need. And we do have some paid tiers that can give you better reporting or more frequent reporting. And as a member of SBAM, you are entitled to a discount for that. So I encourage you to at least try the free version to make sure that you are adequately insured or that you are buying the right amount of insurance as you're shopping.
Yeah, it really has been fascinating as we've gone down this journey of making sure that that any individual business is fully insured. How much, and before RiskAware, before your product, how much guesswork was involved, and people finding it from very wide ranges. Either they're way overinsured, paying for insurance they didn't need, or way underinsured. But really, it's because somebody at some point in the process just guessed. And guessing is not the way to go with something as important as this. So let's go to David Bean from SensCy. So David, first, this is something where a lot of small business owners have would look at the news and headlines and think this is probably mainly a big business problem. So, but are small and medium-sized businesses really targets?
Yeah. Hey, Brian, first of all, thank you to you and Sarah for having me on the show today. And I would say yes. As Joe mentioned, we're seeing a big increase on small and medium-sized organizations being attacked, but having the bad actors attack them. The data will suggest that it's over 400% increase year over year. So I get to talk to a lot of great companies around the state of Michigan who say, well, I'm just a small, retailer or the small manufacturer in mid-Michigan. No one even knows who I am. Well, unfortunately, the bad actors really don't care where you are, what you do. If they find a vulnerability, they're going to be in there. And I really like what Larry was talking about too with RiskAware. I mean, that's a free tool. People should use it.
Great. So how about Joe in the beginning said, 3 things that that individuals could do or that businesses could do to get involved and get get protected. So with SensCy, actually it might make sense, David, just to briefly touch on what SensCy does and the relationship that we have, but then also, what's the low hanging fruit that everybody really ought to come away from this discussion knowing that they could do.
Yeah, so what SensCy does, SensCy stands for Sensible Cyber. And we focus on being the trusted guy for small and medium-sized organizations. And we do this in all different industries, and we do it by having kind of a high-tech, high-touch approach. And again, we start out with everybody by doing what we call, and this is going to get into the 3 things I think every company should do. Every company should know where you're at. Where are you at with cybersecurity? So think about doing that assessment. And at SensCy, we offer something called a cyber health evaluation to help you obtain your SensCy score. Your SensCy score is just like your credit score, except it's for cybersecurity. It's from 0 to 1,000. And we're talking, and so as you think about your credit score, you want it to be over 800 so that you can go and purchase things you want. The same thing is true with cybersecurity. We want to make sure you're over 800. The majority of companies we talk to score between 400 and 600. And what that does, though, Brian, it really makes it really tangible. Now people understand, yeah, my SensCy score is only 600. There's certain things I have to do to allow you to sleep better at night and to know that you confidently can have a good cyber posture. So that's one thing. As I talk about the 3 things. So first thing is know where you're at, get an assessment, get a SensCy score. It takes less than 30 minutes. It's free. And it's a good tool to get you a good understanding of where you are from a cybersecurity posture. The second thing is do education and awareness training for all of your employees. You know, when I was the CIO of the state or CIO of Lazy Boy, right, what we would do is we'd put a lot of money into technology and we had some good protection. But the fact of the matter is you really need to educate your team, because it's the data now is 88% of cybersecurity breaches can be stopped with good cyber hygiene. So give your team a chance. Let them understand what to look for phishing, what social engineering is. Really train them and educate them is really important. And the last thing is, and I think Joe brought this up earlier, multi-factor authentication. It's a great safety step for all organizations. As he mentioned, and I'll back him up, it's not hard to implement anymore. But sometimes it's just taking that next step that's tough. So get an assessment, educate your team, and take some steps in protecting yourself with multi-factor authentication.
Excellent. Well, thanks so much, David. I really appreciate you coming on. Also, Joe and Larry, this is Cybersecurity Awareness Month, and no better time than right now, before you have a crisis, to make sure that you've got all your ducks in a row and you give yourself the best possible shot. You know, sometimes maybe it's just the crooks run into a couple of roadblocks, and you know, there's some easier target out there, and they just move on because you're not the easiest target.
That's right.
Yeah, I really appreciate that, David. And you know, we went to multi-factor identification at SBAM too, and they have made these systems so slick these days in terms of, you know, signing on your phone device. You know, you get a prompt, and was this you? And you say yes. You don't have to, you know, go back over and enter a code. So it's just, they're getting better and better. But here's the thing: is that to the extent that anything's inconvenient, the ones who love convenience are the cyber crooks. Thanks.
And we just have to demystify it for people. So thank you again for giving us this audience today, and thank you for what you guys do.
All right.
Very
good.
Yes, thanks to Larry, David, and Joe for spending a few minutes with our viewers and our members. I did drop a link in the chat here, and we'll put it on Facebook too, so that you can find out more information on these services. Okay, so let's move on to some other topics, Brian, starting with a quick update on the UAW strike.
Yeah, there's it just seems like every single week there's more and more that happens. So last week we covered just briefly that there was kind of a surprise strike, if you will, at the Kentucky truck plant. The heavier duty trucks like the F series and a couple of the bigger SUVs at that Kentucky truck plant, one of the highest profitability plants that Ford has. And what was interesting that came out though afterwards was that Ford had essentially delivered a message to the UAW that a 23% increase was as far as they could be. They couldn't go any further, that it would create the type of a situation where the cost structures wouldn't work, where it would cause them long-term damage in the viability of the company. 23% in almost any other time would have been just an astounding increase. But of course, the union came in asking for 46% wages. Ford had also, and the others as well, I believe, had agreed to a condensed time frame for getting up to the top wage as well. So there was some progress made early in those, but I think it was just essentially Ford saying this is as far as we can go. Has created a scenario where they wanted to inflict a little more pain to see how serious they were about it. But another factor that I think is noteworthy and interesting is that Unifor, which is like the UAW equivalent in Canada. So these three automakers have huge operations in Canada as well. And there's a different union that represent the auto workers there. General Motors and Ford have now entered into, and they're members of ratified contracts that had about 20% increases in wages. And this most recent one, the General Motors contract, was ratified by 80% of the members. So that feels like a dynamic change there. It's been a month since the strike has started, or the strikes have started. And so that's for those who have been out of work and they've got the $500 strike pay a month. That's not a comfortable existence. So I imagine there's pressure building from the inside. The fact that the Canadian auto workers settled for terms that could be obtained, actually better terms are on the table here in the U.S. Could be obtained just by saying yes and entering into an agreement. It's not really clear what the holdup is, except for if they think they're going to get everything that was originally on the table, which of course I think most observers recognized in the beginning was just wholly unrealistic. So 23% of the table, a quicker rise to the top wage after getting hired is what, at least with Ford, has said that's as far as they can go. One other thing is that the Sean Fain, he's the president of the UAW, on Friday in his regular Facebook Live update, while he did not announce any new strikes, he said that they're not going to do it predictably anymore, like on Fridays. Or if they expand, they'll do it. They'll decide. They'll announce that they won't give the same type of heads up, which creates a little bit more uncertainty. It means that everything doesn't happen on Fridays moving forward necessarily.
All right, and next up we have a retail report.
Yeah, and retailers on both the state and the national level have definitely been sending some signals of a weaker, if you will, outlet. But what caught my attention was staffing at retail operations. So you can look at the sales expectations, but this is a time of year when retailers are really ramping up their staff levels for the holiday season. And while there is an increase, a seasonal increase that most certainly will happen and is in the process of happening, some of the industry estimates are showing staffing up to levels that are lower than in the past. So this year projected to be about 7.5% less in terms of staffing for the holidays compared to before. Now, underneath that, there's a whole bunch of trends, right? I mean, you have more and more shopping that's happening online. And people shopping for experiences. There's different trends of things that are that make a difference. Retailers are a piece of the traditional retailers are a piece of the picture, and not necessarily a growing piece of the picture in recent years. So underneath that, staffing decline is more than economic terms, but or expectations of economic softening, but I think it's pretty clear, though, that the real retailers are feeling less confident going into this Christmas season or holiday season as compared to previous years.
All right, and now it is time for Data Monday. We haven't had a traditional Data Monday report in a few weeks, but I think you have quite a bit to share with the group today.
Yeah, I've got several things here, so apologies for kind of trying to run through these so quickly. But there just really are a bunch of aspects to Data Monday, and so first is just the Fed survey on consumer expectations, and you'll notice that the household financial situation much better off than last year. I mean, those that are saying in the survey that their situation is much better off has been trending downward. That's the yellow line, and then also in the New York Federal Reserve puts out a survey, consumer expectations, and it covers a bunch of different topics. What I pulled out here is credit. How hard is it to obtain credit now compared to a year ago? And both of these lines are harder, but it's like either much harder. So in blue is much harder. That's the one that's going up more, or somewhat harder, and that's the one that really had risen before and has kind of leveled off. Now, the University of Michigan, the overall consumer sentiment. So this is the survey, and it's just what people are feeling across the board: consumer sentiment and consumer expectations. You'll see that those had bottomed out. They seem to be kind of on a bit of a climb, but also have started to fall a bit. And so there's first three slides. I just want to show you that you're just eroding consumer confidence, and that's a big tell. a lot of our economic data has to do with human behavior. How confident are people and what types of things are they doing? And to the extent that there's information coming directly from consumers here on a few different aspects, it does look like softening, or people are expecting a softening. And then there's a couple ways of looking at inflation. So there's the PPI and then the CPI. So I'll get to the CPI, which is the more famous one. That's one in the news all the time. But this is actually, the PPI is probably a broader look at the economy and the way that prices are increasing. And so you see in blue is the overall, and then in orange on this slide, taking out food and energy. And but you'll see that both of them have increased, and after a pretty good decrease. And but if we're to look at CPI, which is the one that people tend to look more closely at, kind of mixed outcomes in CPI. So it was up a little bit, 3.09, and so year over year, that's looks good compared to what we had been seeing before. But if we were to look at month over month, and looking at in blue is like overall, and orange is what you consider like core CPI, or core inflation. It was coming down. It's not. It doesn't. It'd be hard to talk yourself into a declining trend as of late. Now, looking at the CPI on commodities, less food and energy, and services, less food and energy, you'll see that both of them are down somewhat, but finally it looks like services, when you take energy out, because if you had energy in here, it would look different. We have seen rising energy costs as of the recent past here. But when you take the fast-moving commodities out, you see services actually starting to decline a bit. And then month over month, you'll see these trends again, especially with the overall and the blue on the top. Just doesn't look like a declining trend anymore. And so I think that's one of the things, that there's just uneasiness out there, and that while the inflation is not as uncomfortably high, the hope was that it would keep on going down till we were looking at 2% inflation each year. And while I certainly wouldn't rule that out, and I absolutely would not say that these are alarm bell type numbers, it's just that definitely from an inflation standpoint, there's not the same aggressiveness and trends that we saw before. Talk a little bit about wages now. For a while, those who switched jobs had much higher increases than those who didn't. So at its peak, it got to an 8.8, almost a 9% difference. People switched jobs and got much higher wages. That has been compressing. So people switching for higher wages has come down. Now, keep in mind too that people generally, that's a big factor. Somebody switches jobs, so you're kind of cherry picking data when you look at job switchers. But the benefits of switching jobs has diminished compared to what it has been in the past. So looking at the Atlanta Fed put out the wage growth tracker. This would be the median or the average wage increase, looking at it year over year, and up 5.2% from a year ago. So that's still pretty healthy increase overall. So you'll see not like it was before, where the median wage increase was much higher, but so historically still high, but the increases are trending down to what looks a little bit more like a normal trend. An interesting thing that developed during the pandemic was that the lowest quartile was seeing the highest percentage increase in wages, and the upper quartile was seeing the smallest. And as you can see, they're kind of coming back in together. This does not mean that the lower quartile has lost wages. This means that they're increasing now. Instead of at 7.5%, they're increasing at 6%. So that's on top of the before when they were increasing at over 7. And then the top upper quartile is kind of starting to catch up in terms of those year-over-year percentage terms. And then I've got a couple of survey questions from the National Federation of Independent Businesses. This is their national survey. So this isn't the Michigan specific data. Our own surveys have Michigan specific data, which we shared with you earlier. But I think it's very consistent with what we're seeing nationally here. Overall optimism and outlook for general business conditions both have fallen down quite a bit this year. And then while they both kind of were up a little bit recently, they've started to come back down again. In terms of small business expectations for credit conditions, you can see that is in blue, that has come down. And not surprising that credit conditions have tightened and the cost of borrowing has increased. And then how many small businesses are saying now is a good time to expand? About 5%. That means that 1 out of every 20 thinks it's a good time to expand. That's about what it's been here for a little while. So small businesses generally right now have not felt like it's been a good time to expand. A lot of things go into that. There's of course demand, but also difficulty in staffing, increased costs, putting margins on or pressure on margins. So a lot that goes into that, but still very, very low numbers in terms of those who believe it's a good time to expand. And that's what we have for Data Monday. That was a lot of slides. I don't know how many, 14 or so. A lot of information out there. So it looks stable-ish, but but definitely a lot of consumer concern about the future that's starting to show up, and probably as a precursor to softer economic times, particularly if those consumers start behaving differently when it comes to their purchasing habits.
All right, well, we will definitely be following all of those numbers and trends. I do want to let everyone know we have a couple of webinar opportunities coming up, Smart Marketing on a Budget this Wednesday. And we also have a cybersecurity roundtable this Thursday featuring 2 SBAM members and Governor Rick Snyder with SensCy. So if you're interested in learning a little bit more about SensCy in particular, you can join that roundtable. And then we have another cybersecurity webinar at the end of the month. So basically just go to sbam.org/events. You can see all of our upcoming webinars, owner to owners, and other opportunities. We'd love to connect with you there as well. Have a great week, and we will see you back here on Thursday.
See you on Thursday, everybody.